Great. So, this is chapter 2. Let's go with some cost terms, concepts, and classifications for managerial accounting. First thing first, in order to have a product, we need three types of costs. First, we have to find the cost of direct material. We have to find the cost for direct labor, and we have to find the cost for the manufacturing overhead. So we need three things in order to have a product. We need direct material, we need direct labor, and we need the manufacturing overhead. What's direct material? Direct material is the material that can be easily traced directly to the product. That material is going to come from the raw material. That will be something that is just some kind of raw kind of stage. And we have to transfer it from that raw stage into the actual product. Second thing that we need is direct labor. One thing I want you to remember, direct material always comes first. Direct labor always comes after that. If you don't believe me, we can do a test. We can hire people and put it in the room. We're not going to give them anything because we don't have materials. We just have the labor. So we're going to put them in the room, we're going to lock them in that room, and we're going to tell them, now produce the cell phones. And we're going to go after 1 week. How many cell phones we're going to find? 0. Why? Because there's no materials. There's nothing there to work on. So for that reason, always remember, direct material comes first. After that comes the labor. Labor, now we're going to have direct labor. Direct labor is the labor that can be easily traced to the product. And then comes to the last point, which is the manufacturing overhead. What is manufacturing overhead? Since direct material, we can easily trace it to the product. Direct labor, we can easily trace it to the product. For the manufacturing overhead left, that will be something that cannot be easily traced to the product. What will be that? Well, that might be indirect material, indirect labor, and some other costs. Indirect material will be some small parts here and there, lubricants, cleaning supplies, anything like that. Indirect labor will be cleaning services, security services, anything related to the product but not directly easily traceable to the product. That will be part of our manufacturing overhead. So remember, product costs have 3 components: direct material, direct labor, manufacturing overhead. Remember it because we're gonna need this one once we start to pricing our product. Because in order to sell our product, we have to know how much is the cost of our product. I cannot sell something if I don't know how much it costs me. Because obviously I opened my company to make a profit. So in order to make a profit, I need to know the cost. And then to ask for the sales price based on the cost and what I want. So the first classification for today is direct material comes first, direct labor comes second. Those are called prime cost. Prime means first. So since direct material comes first and direct labor comes right after, those are called prime cost. Direct labor and manufacturing overhead are called conversion cost. Why? Because they're converting that raw material or direct material into the product. Now, as you can see, direct labor is part of both prime cost and conversion cost. So direct material, direct labor, prime cost, direct labor, manufacturing overhead, conversion cost. So you need direct material and conversion cost. So direct material conversion cost, that means you have all the three costs. Or you can have the prime cost and manufacturing overhead. Again, you have all the three costs. What we're going to do with the overtime? Overtime, usually it will be treated as a manufacturing overhead. So now I'm going to pause this video just for a second. So again, overtime premium for all factory employees are usually considered to be part of manufacturing overhead. If we have a product-specific overtime premium, those are part of the direct labor. Now, first classification of the cost that we saw for so far was product cost, direct material, direct labor, manufacturing overhead. Second classification of the cost for today is what kind of cost is that? Is it manufacturing cost or non-manufacturing cost? So manufacturing cost is a product cost, direct material, direct labor, manufacturing overhead. Non-manufacturing cost is marketing, selling cost, and administrative cost. All those costs are expensed. Now, we're going to come to new classification, product cost versus period cost. Product cost is the cost of the product, direct material, direct labor, manufacturing overhead. That product cost first become an inventory, and when it's sold, become cost of goods sold. Selling and administrative expense, marketing, advertising, those are direct costs, so they directly are expensed. They're called period cost. So product cost again goes to the balance sheet first as an inventory. After the inventory is sold, goes to the income statement as a cost of goods sold, where the period cost is directly expensed. First check, which of the following costs will be considered period, which will be directly expense rather than product cost. Now, the tricky part here is every time when you see something product, manufacturing, factoring, that's product cost. Everything that you see something without those words manufacturing, factoring, anything like that, purely period cost. Let's go with first one. Manufacturing equipment depreciation. Is this related to the product?
Not exactly, I will say.
Not exactly to the product, but indirectly is it related to the product? Do I need the question is, do I need the equipment in my factory to produce the product?
Yes.
Yes. So is it product cost?
Yes.
Yes. What kind of product cost is? Is it direct material?
It,
Equipment costs?
But is it direct material?
Yes.
yes.
Can it easily trace it to the product?
No.
No. So is it direct material?
No.
No. Is it direct labor?
No.
No.
Oh.
Is it manufacturing overhead? Yes.
It could be.
Yes, it is. So it's a product cost, manufacturing overhead. Let's see the next one. Property taxes on the corporate headquarters. Is this related to the product?
No.
No.
No. What kind of cost is? Period cost.
Period cost.
Sorry, could you say again which one is what kind of cost is manufacturing equipment depreciation?
That's a product cost.
Product cost.
Product cost, manufacturing overhead. Direct material,
Product cost.
product cost.
Product cost, yeah.
Now, electrical cost for the light of the production facility,
Product cost.
product cost. If it was electrical cost for the light of the headquarter, then will be
Expense.
expense, period cost. Make sense?
Yes.
Sales commissions,
Expense.
expense or period cost. Right? Okay, so property taxes and the sales commissions, those are period cost. Everything else is product cost. Good. Now let's see what kind of activities, type of activities we have in the company. Based on the type of activity, we have two type of companies. One is the merchandising company. The other one is the manufacturing company. What's the difference? Huge. Merchandiser, they buying computers, they selling computers. Make sense? They buying product, they selling product. They buying finished goods, they selling finished goods. Do they producing something?
No.
No. They just buying and selling, buying and selling, buying and selling. Manufacturer, those actually producing something. But they buying raw material. They buy the raw material, that become direct material. Then they add in direct labor. Then they put in manufacturing overhead. Then they producing the finished goods, and after that they selling the finished goods. For that reason, merchandising company, we're going to see only one inventory account. Merchandise inventory. Buying, selling, buying, selling, buying, selling. In the manufacturing company, we're going to see three inventory accounts. One will be the raw material. Next one will be work in process. And the last one will be finished goods. Now, how good you are with the T accounts?